They're not talking about it on the news, but behind the scenes, some of the world's largest financial institutions are quietly accumulating Ethereum. What do they know that you don't? Today, we pull back the curtain and explore why the so-called smart money is treating Ethereum like digital gold in 2025, and what this could mean for your financial future. Welcome to FinWise Now, your trusted source for global finance and crypto trends. In today's analysis, we're diving deep into the forces shaping Ethereum's meteoric rise in institutional portfolios. We'll sift through on-chain signals, institutional flows, and the technological leap that's transforming Ethereum from a speculative asset into the backbone of the digital economy. Whether you're a seasoned investor or just crypto-curious, this is your wake-up call. Let's start by separating market noise from smart signals. If you've been watching the headlines or scrolling through social media, you've probably seen a lot of panic over price swings. Ethereum's price, as of August 1st, 2025, stands at $3,660.92, a 5.4% dip from its previous close. It's easy to get caught up in the day-to-day volatility. Retail investors often react emotionally to these fluctuations, selling into fear or chasing pumps. But if you zoom out, a very different story emerges. Data reveals that while retail investors are shaken by short-term moves, institutions are quietly buying up ETH. This divergence isn't just noise, it's a signal, and it's worth your attention. So, who exactly is buying Ethereum while everyone else is fretting over red candles? The answer is both revealing and instructive. Over the last 6 months, wallet data shows that ETH holdings among wallets identified as institutional have surged by 19%. This isn't just a handful of small funds dabbling. These are major players with billions under management. BlackRock and Fidelity, two titans of global finance, have both launched Ethereum-based exchange-traded funds following the U.S. Securities and Exchange Commission's approval of spot Ethereum ETFs in 2024. On their debut, these ETFs attracted a staggering $1 billion in inflows, with BlackRock's fund alone pulling in $267 million. These numbers speak for themselves. Institutional demand for Ethereum is not only real, it's accelerating. But the story goes deeper. On-chain data reveals another classic pattern of accumulation. ETH is moving off exchanges at a steady clip. When investors transfer coins from exchanges to private wallets, it's often a sign they intend to hold for the long term, not sell at the next uptick. This exchange outflow is a tried and true indicator that big money is positioning itself for future gains, not short-term profits. Let's explore the strategic case for Ethereum. Why are institutions so bullish, even as the headlines focus on daily volatility? First, Ethereum is evolving into far more than just a cryptocurrency. It's becoming the infrastructure layer for Web3, the emerging Internet of Value, where decentralized applications, financial services, and even AI-powered smart contracts all converge. Ethereum's recent technical upgrades are a game-changer. In March 2024, the network activated EIP 4844, also known as Proto-Danksharding. This upgrade introduced blobs, a form of temporary data storage that dramatically reduces transaction costs for Layer 2 rollups. By easing data storage burdens, EIP 4844 has supercharged Ethereum's ability to handle massive transaction volumes, paving the way for mainstream adoption of decentralized finance, gaming, and much more. But that's not all. Ethereum's supply dynamics have also shifted. Following the merge and the transition to proof-of-stake, Ethereum now features a deflationary supply model. Transaction fees are partly burned, reducing the total supply over time. In practical terms, Ethereum is becoming scarcer with every block, a trait that has historically made assets like gold and Bitcoin attractive to long-term investors. In the eyes of institutional allocators, this scarcity combined with a burgeoning ecosystem is an irresistible combination. So what does the long-term vision for Ethereum look like as we move forward into 2025 and beyond? The writing is on the wall. Ethereum is on track to become the backbone of digital economies worldwide. From decentralized finance to tokenized real-world assets, and from supply chain management to AI-integrated smart contracts, Ethereum's programmable infrastructure is being woven into the fabric of tomorrow's digital world. This is why forward-thinking institutions are betting big, positioning themselves before the next wave of adoption hits. Let's turn to some key on-chain analysis highlights that reinforce this bullish outlook. First, exchange balances continue to drop, a historically bullish signal that suggests investors are locking up their ETH for the long haul. Next, we're seeing sustained growth in whale wallets, those holding large amounts of Ethereum. This trend confirms that big players, whether funds, companies, or even high-net-worth individuals, are steadily building their positions. Finally, the amount of ETH being staked on the network continues to rise. Staking not only earns holders yield, but it also demonstrates a long-term commitment to the Ethereum ecosystem, a clear vote of confidence in its future. What does all this mean for retail investors? This isn't just about institutions, it's a signal for you. When some of the world's smartest and most informed investors are buying Ethereum hand over fist, it's worth asking why. The answer lies in a combination of cutting-edge technology, improving scalability, a deflationary economic model, and a growing role as the infrastructure for Web3 and digital finance. No one can predict the future with certainty, but ignoring these signals could mean missing out on the next major wave of digital innovation. To sum it all up, Ethereum is evolving from a speculative project into a foundational layer of global digital infrastructure. Institutions know it. Now you do too. Don't just follow the headlines, understand the signals driving the next phase of crypto adoption. If you found this insight valuable, don't forget to like, subscribe, and follow FinWise Now for more in-depth analysis and the latest trends in crypto and global finance every week. Stay curious, stay informed, and remember, in the world of investing, it pays to watch what the smartest money is doing.